Hi, I'm here today with Allen Bromberger of the Bromberger Law Firm. I think he started his law firm in 2020, just after the pandemic had begun, and I'm sure we can talk a little bit about that. But before the starting of his own law firm, he's been involved in the social enterprise and responsible business movement for a number of years. So I'm really happy to have him on today to speak about the legal work he's been doing in the space. So thanks for coming, Allen.
Thanks, Patrick.
So tell us a little bit about how you got started. So 25 years. That's 1999. So this
It's
is
more than that, but I've been doing this really for 25 years. Before that, I was a sort of a traditional public interest lawyer.
okay.
And so I was dealing with everything from prisoners' rights and battered women and all kinds of stuff. But eventually, I started working with nonprofit organizations, doing not the impact that they were doing, but actually representing the organizations themselves.
So there's several types of regulations that are specific to nonprofits it's a niche area of practice, right?
It is a niche area of practice, and it's an area most nonprofit lawyers rarely deal with businesses and business lawyers and the other way around. It's considered a tax practice.
Okay.
But the idea is there that your clients are all giving priority to some kind of impact.
Mhm.
They're economic actors. They have income, they have expenses, they certainly file taxes, there's accounting or all kinds of stuff. But the purpose of those organizations is to have some positive impact, not to make money. Whereas in business, it's exactly the opposite.
Mhm.
Purpose is to make money. If you happen to do something good along the way, that's fine, but it's not the purpose of what you're doing. And so when you take a topic like ESG, you really have to straddle both of those worlds. People talk about it as impact lawyers and impact investments. We don't use the language of nonprofit because that would be counterproductive. But I spent years practicing in the nonprofit side, and then I moved over and spent years practicing on the business side. And I eventually settled in the middle. And my practice now is I represent both nonprofits and for-profits and a lot of joint ventures and tandem combinations. I have nonprofits investing in for-profits that are supporting nonprofits, all kinds of stuff like that, because they're trying to have positive impact and make money at the same time.
So for instance, can a nonprofit be a majority shareholder in, say, a social enterprise or a social impact company?
Yes,
Okay.
nonprofits can own businesses.
Hmm.
There's if we're talking when we use the word nonprofit, we often use that synonymously with a 501(c)(3) charity for tax purposes, because half of this is corporate law and the other half is tax law. But in this case, the charity sections of the code allow a charity to own up to 100% of a business. Um,
And
and
then it's something along the lines of but money that the nonprofit gets that's wholly commercial has to be, recorded in a different way or something along those lines. I don't want to get too deep into the weeds of
No,
nonprofit
no,
law.
there's something called the unrelated business income tax. If a
Yes.
charity engages in business activities that are not directly in furtherance of its charitable purpose,
Yeah.
it pays corporate income tax on that
Hmm.
because it's not covered by the tax exemption.
Yeah.
But it
That makes
doesn't
sense.
jeopardize its status. It just has to pay some tax.
Okay. That makes sense. So whereas with a traditional for-profit company, of course, their whole purpose is to generate revenue and generate profits for their shareholders.
That's right.
But then a lot of the work that you do in the context of for-profit companies is ensuring that mission can be utilized and can be advanced through the for-profit entity. And can you tell me a little bit about the type of legal regimes that you work on so that you can allow for that?
Sure. Well, this stuff tends to come up in two contexts. One is when you're putting a venture together and structuring the venture. And that often includes raising money and who your investor is going to be and what are the interests of the shareholders, so to speak. And anybody who's raised money for a business knows it's not just the financial terms. There are all sorts of other things, including governance and preferences and all kinds of things that are negotiated in the course of that. And the others, it also typically also comes up in transactions where you have one party financing another, and finance drives a lot of that stuff, and they're entering into contracts, agreements. Fundamentally, it can be a sale of assets, it can be a joint venture, it can be a subcontract of a piece of work, and either side of that equation can be nonprofit or for-profit. And so that gives you a tremendous amount of flexibility to use these different structures. But it all starts with a fundamental question, and that is, when we say mission, what do we mean? So, for example, when we are doing transactions, or even when we're starting new ventures, we very often include mission purposes in the term sheets because we want everybody aligned on the non-financial objectives, whatever those may be. And almost every single one of these cases, there are going to be articulable, measurable, non-financial objectives. And those can be reduced to metrics sometimes. You can have reporting on those. You can have incentives. You can have disincentives. You can have exits if certain conditions aren't met. Who decides? You can have the parties decide. You can have third parties decide. Dispute resolution becomes extremely important in these arrangements too, because you're trying
now you've titillated me, right? Because that's what I do. So I do dispute
but
resolution. Do you
it's
find
really
that
what kind of commitments did you make going in? What were the expectations going in? What happened? Were those commitments and expectations fulfilled? If not, what does that mean? And so everybody's thinking that way, whether you ultimately end up with a dispute or not. When you're putting these things together, you're thinking about, how do we do this in such a way that the incentives align, people get out of it what they need, and we can do this in such a way that we actually understand what it is, so that if we have a disagreement, we can work it out.
would you say that in the context of negotiating these types of, let's say, mission-oriented deals, do you find that there's more time spent on defining the parameters of mission, defining whether or not it's material to the contract, defining how it's going to be monitored, where this is kind of a central issue of the negotiation, or is this one of the several other traditional issues that you face?
It's not usually central, it depends.
Mm.
But when I have a mission-oriented investor who's investing in something, and they may be taking what I call uncompensated risk, they're not getting exactly market terms, and part
Yeah.
of what they're seeking is an impact return rather than a financial return. So they're willing to do it, but they want that impact return. And in those situations, they will negotiate for strong commitments around mission. I just did a deal recently. It's a sale of assets from a nonprofit to the for-profit.
Yeah.
And then for-profit has agreed to a number of, I won't even say restrictions, but conditions, constraints, specifics in how they're actually going to manage and use those assets. Because if they couldn't get that commitment, then the seller wouldn't have sold them.
This is
So it becomes
kind
a
of akin to
material
kind of the
business
Ben and
term.
Jerry's example, where a
Yes.
mission-driven company is selling to a traditional for-profit company, but there's a lot of work done in the deal documentation to ensure that mission remains after the sale. This is just a random question, but I'll see where it goes. So there's the rule against perpetuities that we all learn about in law school, and the basic idea is that you don't want to restrict a buyer's activities far away from the transaction. Is there any similar type of concept in the sense of trying to enshrine mission, whereby the law doesn't want to restrict a buyer from doing something, say 30 years in advance or anything like that?
I don't think so.
Mm-hmm. I know it's kind of an
No,
off the wall question,
generally
but
there are not. I mean, it's the parties themselves. So
mhm.
you certainly have a tension of how long is somebody going to be bound by these restrictions? I agree to behave a certain way forever or just for the next few years.
Well,
We're going to
there's
give you the right to do X, Y, Z forever
mhm.
or just while you're an investor. Or so these are all negotiated terms of the agreements.
Or the approach you can take is say for the company that's say selling, you enshrine in the company certain obligations and certain corporate governance structures such that the thing that's being sold is the thing with these restrictions. So the buyer is
Yeah.
buying it with these restrictions. So you're not restricting the buyer's behavior as such, you're restricting what it is that's being sold.
It's an interesting, there have been some interesting lessons because one of the early buyouts was a company called Nantucket Nectars.
Okay, yeah.
They were all kind of hippie and they had cute stuff inside their caps and all like that. And they reached some huge valuation. And Quaker Oats bought the company for something like $100 billion or some insane amount of money.
Yeah.
And they said, well, this is sugar water. So they treated it like any other product. They didn't really understand what they had bought. Sales plummeted. And 10 years later, they took a 90% loss on it. Whereas if you look at a company like Ben and Jerry's is still the number one premium ice cream brand in the world. Was
Branding.
so identified.
Mhm.
And they set up a structure where they had to consult with the Ben and Jerry's Foundation when they made certain types of business decisions. So they weren't, Ben and Jerry didn't control the company, but they had a lot of influence. And that turned out to be enough to keep it on mission, not necessarily because the people believed in the mission. I'm sure some did, some didn't. But
Mhm.
it was because it was a business imperative. The mission gave them an advantage in the marketplace. Patagonia has just done the same thing. They've taken their company and they've put the ownership, they split the governance from the profits, but they put all the ownership in essentially non shareholders who are not profit oriented,
Mhm.
whose job is to make sure that the purpose of the company remains constant long after the founders are gone. And they came up with a very interesting structure that did that. And it wasn't some crazy ESG lawyer that did that. These are business lawyers who are solving business problems for their business clients.
Yeah, that's what I like about this space. I think it's reached a maturity such that there's traditional business lawyers. I spent, 10 years of my career doing traditional international disputes with traditional companies. But now we can apply those skills in the responsible business context because we appreciate and sympathize with people who have multiple bottom lines, who have social impact, but also still need to generate returns. And so
Yeah,
we
it
can give
used to
that
be
sophistication. Yeah.
when I would often have like a big firm on the other side of the deals that I'm doing. And when I
Yeah.
used to do this and I would give them language and say, we want this and do that, they didn't understand it. They didn't know what it was. They needed to get rid of it, whatever. Nowadays, people are much more open if it makes sense to put it in. And so
Mhm.
even the drafting of these agreements is changed.
Well, and I would imagine the advantage of working with someone like yourself and not to be be your spokesperson, but the fact that you've been doing this for such a long time means that you've written these types of agreements and these types of clauses several times, such that when the lawyer on the other side says, "I've never seen this before," you can confidently say to them, "Look, I've done this a dozen times and in these few different permutations. So we can do these few permutations if this makes you more or less comfortable. But don't worry, this is something that's done
Oh yeah, yeah. And
every
then
day."
they take them and they use them because now they
Yep.
have it.
Yeah.
And this is how the sort of the culture changes of what becomes expected. And when you start with it in the term sheet,
Mm-hmm.
you say we're not doing the deal unless we can have agreement and alignment on the non-financial aspects of what we're doing and that giving priority to those. It creates an expectation all the way along that these things are not going to make it harder to do the deal. These things are not distractions. They're not expenses. They're actually going to make this a better, stronger deal. Again, it depends on the kind of assets. It depends on the type of the transaction. Some transactions, you wouldn't do this.
Mhm.
But where you have a mission-oriented business or something, some business venture where you're trying to have impact deliberately,
Mhm.
not as a side thing if it happens to work out that way, but you're deliberately setting out to do it. Healthcare, education, organic foods, even fashion now. Any polluting industries are worrying. Everybody's trying to do this. How do you partner? How do you change these practices? What's another way to do it? And we're seeing, the earlier stage and the ESG oriented companies that are very often the ones who are innovating and showing the larger companies how to do these things. And so they become very attractive partners for those larger companies. But as a lawyer, you're dealing, it's the battleship. They're not used to doing these kinds of deals. They're not opposed to it. They're just not used to it.
So you just have to make them comfortable, and it's almost probably a process too. I mean, it for any commercial lawyer, your ability to speak in quantitative language and to understand commercial implications of things, financial implications of things is important. Your ability to understand the how impact investors might quantify impact versus the financial return that they're expecting is probably very important. So
So
how
let's,
do different companies, different entities value impact or branding or
well, I think if it helps them accomplish what they're trying to accomplish, then they value it.
Yep.
But what you said is one of the reasons why it becomes important as an attorney to try to get specific. You don't just say, hey, we want to do good things. What does that actually mean? Can you
Mm-hmm.
measure that? Can you
Mm-hmm.
articulate what it means? How long is it going to take? How much fuzziness is there? And
Mm-hmm.
ultimately, who decides if you did or not? And what if you did? And what if you didn't?
Mm-hmm.
So it just changes the dynamics of the deal a little bit, enough that you have to have these other conversations in order to get to a closing, because if you don't overcome them, you're not going to close.
Yeah, and I would be curious if most of these kind of impact terms are sufficiently material to the transaction such that you can exit the transaction if there's a breach of those impact terms. And sometimes that's the case. Or sometimes I'd imagine that it would just trigger maybe a change in the interest rate recoverability, a change.
It's not that different from any other investor going in with an expectation and saying, well, what if it doesn't work out?
Mm-hmm.
Do I have drag along rights? Do I have a right to redeem if XYZ is triggered? We didn't invent any of this stuff.
Yeah.
All we're doing is saying, well, let's let the trigger, instead of the trigger being a cost ratio of a
Mm-hmm.
certain percent, let's let the trigger be a DEI target,
Mm-hmm.
or amount of tons of carbon that you either emitted or didn't emit, or an investment that you made, or a product that you introduced, whatever the business objective is. If I mean, listen, and we do impact deals where we don't put any of this stuff in because you don't need it. Meaning the
Because
only if
both entities are kind of impact oriented.
and or the only way to be successful financially is to have an impact.
Yeah.
Like if you're trading carbon credits,
Okay. Yeah.
it it's a volume game. You understand what I'm saying? If you're successful at that, you're going to be successful at pulling carbon out of the air. I mean, it's implicit in the business
Yeah, if
model.
you're providing rural healthcare services, that's yeah.
It's sort of implicit, and so you don't need like separate things. But you still almost always want some commitments to be explicit. And I think that's always the question, is which commitments are explicit, which ones are implicit. And that's the true in any deal, any venture. But in this case, what we say is some of those non-economic, those impact terms, we want to be explicit about them. And if they're important, if they're material to the investment or to going in to doing whatever you're doing, then we probably want some enforceable commitments around them.
That makes sense. So do you find, and I wonder if this is typical of transactional lawyers in general, do you find yourself more on the investor side, say representing impact investors or representing kind of social impact companies or mission-driven companies, or is it a mix?
It's very much a mix.
Hmm.
Earlier in my career, I did more investors, but there are a lot of people who are bundling and putting together investments and funds in the space. So you have fewer and fewer direct investments in companies now by impact investors. The funds are more the investors, not always, but
Maybe
we see
explain that a little bit more. You're saying that there aren't these boutique impact investment shops making an
there
investment. It's
are. What I'm saying is, for a while there weren't. It wasn't considered like an asset class. I mean, there just weren't people who knew how to do these investments. There were, but they weren't. It wasn't an area. And in the last 10 years, as ESG has really taken hold, and this notion of screening and all of those things have become very mainstream in finance, a lot of people have turned their attention to this, particularly because the ESG markets are such enormous markets. Healthcare, energy, transportation. These are enormous, enormous markets, and they have to transition. And so, who's got the opportunity to finance that transition is very attractive to people. It's like another, it used to be, emerging markets, and then it was tech, and then it was, and now it's, yes, this is where, because it's where change is happening, and change creates opportunity, creates economic opportunity. So all kinds of investors are coming in, but the idea of doing due diligence and figuring out and how to value these companies and how you value these deals and negotiate the terms, if you run a foundation, even a large foundation, that's not what you do. Or if you're a family office, but a lot of times you don't really know these businesses that well, or it's a big lift. And so it's natural that they have turned to various kinds of investment managers who have expertise here, and they've developed their own screens and their own metrics, and who then follow up on the companies and can let you know how it's going. And you're going in with other people who are similarly motivated as you. That's become a fairly attractive model because the fees that the managers charge, it's just part of they had overhead
they charge
anyway.
a premium for ESG investments,
Right.
things like
And so I tend to represent now more companies who are raising capital I still have investors.
that. Mhm.
Um, but that's changed a bit.
But that makes sense. Yeah. The market of impact investors is more limited than the amount of companies that are looking for impact
And
capital. The amount of impact capital
and
provider is more diffuse.
the investors are doing a different kind of investing, and they're looking to be together with their peers to do it. I
Mhm.
don't think anybody is sort of extremely confident in their ability to do it well. It's a hard sector to invest in. And so I think a lot of investors are saying, I want to find other people who can validate what I'm doing. Most of these are not public companies. These are not public deals. These are private placements. And so it's just a very different kind of world. But I mean, at the other extreme, there are things like social impact bonds, where the
Mhm.
repayment is explicitly tied. There's a profit only if you accomplish the social objective.
Mhm.
So it's not like there's just one way I don't do social impact bonds, but they're certainly out there. It's just one way to say I'm paying for impact. And if I don't get impact, I don't pay.
So we mentioned a bit your work in the nonprofit space and how that's a very niche area of law. Are there specific regulations that are related to mission-driven transaction, mission-driven ventures that you have to think about that maybe a traditional corporate lawyer doesn't come across? So, for instance, SEC regulations related to ESG disclosures.
Well, yes. I mean, I think anytime you're doing a placement like that, you're thinking about disclosures. And in this space, we certainly have developed disclosures around mission and around purpose, exactly for the reason you do disclosures to any investor, which is they can't complain afterwards you didn't tell them about it.
Mhm.
And so it's not a material risk. It's a part of the summary of the business. It's a material aspect of the business, but we do not include it as a material risk unless there's something particularly risky about about the model that they have. But it's you know it's almost like branding and reputation in the sense that it's a little bit intangible,
Mhm.
but it's very important, and you do need to disclose it.
Mhm.
And certainly if your key people need to have certain qualifications or experience because you're in a particular space and you're doing something unusual or whatever, you can't just go find somebody who knows some of this stuff. Not that many people. And so sometimes that can be a risk. But yeah, I mean, I think you approach that. And when I was representing nonprofits, I had never done securities law. I didn't know about any of this stuff. So I've really had to learn, what does that mean? What do you need to disclose and how do you need to disclose it? But from a practical point of view, it's pretty straightforward.
So, so I mentioned, the depth of your career, and I think it's a good opportunity to get a sense from you how you've seen the last maybe 5 to 10 years of growth in this space, and maybe where do you see the next 5 to 10 years of growth in this space?
I think in the last 5 to 10 years, it's gone from being kind of the lunatic fringe to a good solid minority.
Mhm.
Um, and I think in the next 5 to 10 years, it's going to move into the mainstream,
Mhm.
meaning the things that we're talking about. Every business lawyer will be thinking that way. All business conversations will be taking these things into account. I mean, they already do. They already do.
Mhm.
Um, but it's not ingrained in people. It's still they're still responding to outside influences, and there's still a lot. It's not fully accepted at all yet.
Mhm.
Um, and to me, the big question is the extent to which what I will call positive social impact. Right now, there's a special little category of corporations called benefit corporations.
Yeah.
And they voluntarily agree to have a positive social impact, and they're held to that. And we use public benefit corporations as entities quite often when we have mission, because it empowers the board to give mission the same priority as profit in operating and running the company. So that's very helpful.
Mhm.
But is a tiny, teeny, tiny number of these things out there. And so the question is really whether this general obligation to take into account the impact of what you do and the effects of what you do on society and on the environment is eventually going to be imposed on all companies.
That's where I was going to go. That's where I wanted to go next. So your career tracks kind of the kind of first wave, which I always call is kind of the CSR wave, where it was these voluntary consumer-led or at least branding-led strategies where they were diffuse, they were kind of vague promises that companies would do. Then you have kind of, about 10 years ago, kind of the investor-led space where it's ESG, it's impact investing, which
We got
implemented a lot more
standards, we've
rigor
got
because
metrics.
they're quantitative guys, so you have to have metrics, so you have a lot more hard numbers, but it's still voluntary to the extent that you're finding these financiers. The next phase is when government actually makes regulations where they codify people's or their constituencies' beliefs in responsible business conduct and the types of obligations that companies have. In the
Absolutely.
context of the international human rights work that I'm doing, you're finding a lot more of that now, where governments are saying you have an obligation to undertake these steps to ensure human rights are protected. right?
And I find that the opposition to this is not really coming from business. It's
Yeah,
political opposition
yeah,
because businesses understand that this is what it is and this is
yeah,
what it's going to be. And if
yeah,
you want to still be existing 50 years from now, you're going to have to embrace this and make these adjustments.
yeah.
How fast, in what way, et cetera, et cetera. Like I say, they're looking for partners, they're looking to learn, they're looking for innovation, they're looking to do this. And up until now, we've had pretty clear momentum in this direction.
I mean,
But
to be clear,
I
no
push
business wants regulation. Anything that could potentially conceivably eat into the profit margin, businesses are going to object to. But at the same time, but oftentimes what you find is that businesses are more warmer to these because A, they understand that it's just an imperative from the purposes of climate, from the purposes of their reputation, but also if it's a regulation, it's a standard in the industry. So it's everyone in their industry has to abide by these rules.
speed limits.
Yeah, exactly.
And these are environmental speed limits
Hmm.
and safety belts.
Hmm.
And 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 again, the opposition didn't necessarily, the car manufacturers just figured out how to put seat belts in, you know?
Yeah.
They didn't sell any fewer cars.
Hmm.
And I think business finds out that this is not causing them. I mean, some people are having trouble with it, and other people are getting an advantage. That is true.
Hmm.
But I think the opposition to this is not business opposition. It's happening, and it's going to continue to happen. And I think that's going to be true. You asked about the next 5 to 10 years, and then that's going to be true regardless of what government does,
And
because it's being driven by much higher imperatives than U.S. government.
and that and does your practice ever, you mentioned imperatives other than US government, did your practice ever touch upon other regulations from abroad, for instance, EU regulations around corporate disclosures, things like that?
Yeah, yeah,
How
and
does
it's
that interface with your work at all?
well, it's very different. So, for example, right now I have a client that is a nonprofit that's in the Netherlands.
Yeah,
It does some commercial, some of their activities are commercial, and they have earned income as part of what they do. Very
yeah.
common in the nonprofit world. And the Dutch have just changed their law so that any kind of commercial activity, anything they charge for basically is taxed.
Okay.
And so this charity is now going to relocate to the US, ironically,
Yeah.
where they're going to be permitted to conduct commercial activities that are in furtherance of their purpose. It's not like they're running some business off on the side. All of this stuff is related to their business, but it's very common. Most nonprofits in the last 10 years, again, it used to be very strange. Talk about the past versus the future. Nonprofits, oh no, we do God's work, God will provide. And we don't have to be commercial and we don't have to be run like businesses.
Mhm.
That has changed. Nonprofits are much more business-like and they pay much more attention to the bottom line. And many of them have developed earned income streams, ancillary income streams, to try to, solidify their finances. At the same time, businesses are becoming more charitable, more public spirited. They're partnering with charities, all of that kind of stuff. So it's there. The consumer markets support it. The financial markets support it. It's just politics where I think it's the only real obstacle right now. And if
And
you're an ESG proponent, as I am, you say this too shall pass.
so
That's
so maybe
democracy.
one kind of final question I'm curious about, because you have a perspective where you think about the legal industry as a whole. Are there areas where you think there's education that's lacking in the legal industry where lawyers might need to focus on gaining skills or gaining kind of thought patterns that are a bit different?
Well, I mean, I think in a way, both the lawyers and the clients are changing their thinking.
Hmm.
I think it's a process. I mean, lawyers, if they have opportunity to work on these deals and they're exposed to it, they'll get it right away. They're smart enough.
Yeah.
But the law firms will do it if their clients want them to do it.
Hmm.
So ultimately, it's the outside constituency for change that drives all of it, because clients are responding to the market and the lawyers are responding to the clients.
Yeah, because that's because the clients are their market.
It's pretty simple. That's why I say, if you want to do work in this space, you don't go find clients who aren't doing it and try to convince them to do it. You go find clients who are doing it and help them do it. And
No,
that's
no,
what I do.
I'd echo that in the context of the human rights work. It's much better to find clients that are interested in doing it than try to sell clients on why there's a risk. Yeah.
And they're having a lot of success and they're doing incredible stuff and everybody else wants to do it and so forth and so on. So as long as I can get paid, I'm happy.
Mhm. But and then being able to speak kind of a multi-bottom line language is essential for these new clients so that you can be sure that you're addressing their financial concerns while also addressing their kind of impact concern. Because I think a
Yeah.
lot of lawyers are less comfortable addressing impact concerns. They're comfortable giving you the financial implications of a particular decision, but not necessarily the impact implication.
I think it depends. It's not part of their training. So it depends
Yeah.
who they are as people. A
Yeah.
lot of the people who worked at a nonprofit or worked in human rights before they went to law school or
Yeah.
whatever. And so if they have a chance to do that, they love
Mhm.
to do that.
Yeah. Yeah.
The problem
Yeah,
is
exactly.
nobody ever told them it was okay to do that. So
Yeah,
that's
nobody ever was listening before.
slowly
Yeah.
trying to change. Say, yes, of course you do it this way.
Mhm.
And
Okay.
once people know it's allowed and you can do it, and it doesn't cost money and it actually builds really good, strong companies,
Mhm. Well,
it's gonna go to the mainstream. That's my belief, but who knows? Maybe not.
well, let's hope so. Let's look. I look forward to having you back here in 5 years, and we can talk more about how this has grown. Thanks
Count
so much.
on it.
Thanks so much for joining us today. Is there anything else you'd like to say before we take off?
No, the only thing I want to say is there's like 10,000 reasons not to do something, but if you want to do something, just do it.
Mhm.
That's what this whole space is about. Don't think of why you can't do it or any of that stuff. Just find the opportunity and go do it.
Yeah, I mean, that's our job as lawyers. Our job is to be solutions providers, not to be hall monitors. So it's good that we've been doing this work. All right. It's great to speak.